What if your money could grow, and you never paid a single cent of tax on the profit? That's not a loophole. It's Canada's tax-free savings account, and here's how it actually works. A TFSA is a registered account where your investments grow completely tax-free. Ottawa launched it back in 2009. The catch? Your deposits aren't tax-deductible. But here's the magic: every dollar you take out, including your gains, is 100% tax-free. So who's in? Any Canadian resident, 18 or older, with a SIN. For 2026, you can add $7,000. Didn't use last year's room? It rolls forward, forever. Eligible all the way back to 2009? You've now got about $109,000 in total room. Over $100 billion sit in TFSAs across Canada, and it's easy to see why. Growth. Tax-free. Access. Withdraw anytime, and recontribute later. And those withdrawals won't claw back your income-tested benefits or credits. Total flexibility. And a TFSA isn't just a savings account. Hold stocks, bonds, mutual funds, ETFs, GICs, or cash, all under one roof. Pull money out tax-free, and that room comes right back the next calendar year. Try that with an RRSP, those withdrawals are taxed, and the room's gone for good. So make it work harder. Check your room in CRA My Account. Match your investments to your timeline. And watch for over-contributions, those get penalized. Open a TFSA, or dust off the one you've already got. This isn't financial advice, but it might just be your smartest tax-free move yet.